Happy Friday, traders. It is the 12th of October, 2018. It's 8:03 a.m. Chicago time. What a week. Hoo-ha. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not at all necessarily indicative of future results. That wasn't very proper English. This morning, the markets are coming off the lows in the indices. We're seeing a little bit of risk appetite coming into play here. The NASDAQ is up 109 points, 110 and a half, 110, 110 and a half. It's like popping around. Up 1.56%. Crude oil's trading at almost $72. It got to $72.01, up 96 cents. Currently at 1.34%. The S&P is up 29 points, getting deep into yesterday's upper range, up 1.06%. The laggard today is gold, and the other kind of safety instruments, the cable, the yen, the bonds are down 15 ticks. The euro is down 350. Is that 355 or is that 35 and a half ticks? I can't tell. Japanese yen down 28 ticks or pips, and so on. So I would say risk appetite is back on, which plays nicely with the structure that we have yesterday. VIX yesterday popped all the way up to 28 and a half or so, almost 29, and came off to 24 by the end of the session on that run up. So all the VIXers out there are probably going to be playing today. So we'll see how that goes. Let's hop. Well, for one thing, looking ahead at what is likely to interrupt us today. We got import prices earlier, but and numbers out of Germany, the CPI, industrial production out of Europe. We have University of Michigan prelim. This could be a mover. It's a high tier figure. We have that for October, expecting 100.5. 100.5. Fed's Evans spoke already, or has been speaking. Making some comments that are quite dovish. He said it's time to adjust policy stance to at least neutral, not worried about inflation. Slightly restrictive policy makes sense. Slightly restrictive could mean about 50 basis points above neutral. Too bad he's not a voter. And so that's what's on deck. We do have Fed Speaker Bostic, who's a voter neutral, at 12:30 Eastern, and that brings us into the weekend. Okay, so that's where we stand. As far as what we expected yesterday, here's the review. So yesterday, the primary scenario was looking for a dip down and then a push into 2807, 2806, and then a drop out of range to extend down. I'm being very modest in my projections. Between Tuesday and Wednesday, the range exploded. So I'm expanding that range to about 40 points or something, but still, it's not enough. The scenario that ended up working out yesterday was scenario 3, a quick test up and then a push to 27.75. We ended up pushing a little farther than that, but we got to the big area that I talked about yesterday down at 27.75, the MC point of control from the beginning of the year to now. That's the most valuable price right there at 27.75. So I expected the market to stabilize a little bit. It ended up pushing through by a bit and then pushing back up. Let's take a look at what happened. A lot of action. That's what happened. Let's get rid of this trend line. So there's the up, down. See how it dipped out of the range, pushed up 27.9875, and then fell back through. That's pretty much what's outlined there on scenario 1, right? So scenario 1, open auction, dip down, push up, and get out. And then this is what we got. Okay, dip down, push up, and then get out. And then it got out, got back in, then it got out again. It went all the way down to 12, past 27.27. Right down here, expected the market to stabilize a little bit back in the point of control. And that's where we stood yesterday. Ooh. Let's put that back up. Into the overnight session. The overnight session, from the time it opened, seeing pretty good drift up. You know, we're bank earnings this morning. Pretty good drift up into the European Open. It happened to peak out right at the European Open. And then those damn Europeans, just came in and sold it back to the mid. Nice job. And then we're popping back up. We have somewhat of a P-shaped profile today. A little short covering potentially. Moved off the bottom fairly rapidly and holding steady in the upper end of the range. Above mid, point of control in the upper end of the range as well. Looking very rally-ish. So that's where we stand today. So we've come back to that little excess peak we put in yesterday, which was odd, sort of on news. A lot of talking yesterday about the Fed and how it's, not doing a good job and blah, blah, blah. And then a different person from the U.S. White House would come out and say the Fed's doing a great job and we like that it's independent. And then the next person comes in and says the Fed should ease up. This is kind of unpatriotic to raise rates, and back and forth. And the market kind of started responding early on, but then started to ignore the noise, as I think it should. You know, the proof is in the numbers, not in the opinions of politicians. So this is where we ended up yesterday, and so far, very interesting. I mean, overnight, I gotta point this out. If we look at how things look overnight, and the reason I use Bookmap for that to display that is because not only are we seeing the actual price action, which is what the only thing that your chart shows you is what actually happened in terms of fills. This is showing me what took place in terms of bids and offers in the market. And when we peek in at the market once it reopens, which is right here, reopened right there, you could see how it drifts up. But there's, when I zoom into the order flow here and look at how the market's responding in various areas, I gotta hand it to the overnight folks who seem to be doing a really good job of trading structure. If I was not in the United States and the extended hours were not in the overnight and I did nothing but trading, I would look at the ES. It seems to be holding pretty good on rotations. The price structures, collisions, liquidity pools that show up at night seem to be holding more clearly as I go back and review the price action. It's I just want to point out that it's really unusual in that the overnight session tends to be quite noisy, not enough volume to capture my interest. But as you cycle through, you'll see that, we have, like here, 56.5, for example, to 57, nice liquidity pool on the last low, and then it shoots up. We see liquidity pools on the sell side right there. The market pushes up to it, gets to that, basically trades that area and comes right off. The order flow, if you're a just pure order flow trader, in my opinion, the overnight session is providing some pretty good opportunities. Of course, derivatives trading is not suitable for all investors, as I said earlier. But I just think it's pretty awesome how the overnight session is taking over as a decent trade, or cleaner, quote unquote cleaner, relatively cleaner trade, in my opinion, than when the cash is open in the U.S. So that's the review segment. Let's take a look at where we are. By the way, if we take don't forget during this time to keep an eye on the bigger picture. And I, pulled this up yesterday. Let's go to this. I pulled this up yesterday to show you where that 27.27 comes from. That's the most traded price. This black line that goes across here, it's 27.27 and a quarter. That's the most traded price of the point of control of everything going back to the beginning of the year, almost January 30th, that peak there. And we have come right back to it in a matter of couple of days. We took back the last time we were here. The day we moved out of here was in July, early July, and we just took it all back the last 3.5 months in about 2 days. As the adage goes, the markets take the stairs up and the elevator down, and really enjoyed this elevator ride over this week. So this is where we are. We do seem to have an excess low. So if we look at the technical side of yesterday's profile, we see that that's what we call an excess. This is a market that has pushed through. So everything below that point of control yesterday appeared to be in excess. Why? Because the volume was not there. There was no participation. There was a relatively less participation below 27.27. There's a quick pop once we got to it, pushed through the mid all the way up to VWAP, as you see here, to the tick, and then came back off with a higher low, and now we're pushing higher. The market trading 27.78.25, approximately 50 points higher than the point of control from yesterday, and approximately 65 points from the low. So to me, this looks like we have chiseled out a low, at least temporarily, barring news. It does look to me like we have a temporary low in place, and we're likely to start exploring the big sell-off day, the 100-point day from the other day. And so this is a very successful, and despite the frenzy, a very orderly test of that MC point of control. This is how it is in the books, in the textbooks, right? This is how it is since I discovered volume profiling back in 2005 or 2006. It's kind of shocking to see it work so well in real life. But that's just a clear excess there. Just the auction just cut off right beneath there. And how do we know that? We look at the volume down here, quite poor participation. So the test down, there was no interest, and boom, it shoots back up. Those of you who watched it play out probably noticed the same. So what do we have? We've closed off a lot of levels. We've closed off a lot of gaps. There's only one gap below left. Coming into today, very difficult to, given the recent narrative, very difficult to predict what the potential probabilities are for the various scenarios. But overall, I'm looking for an open auction. This is opening in range in value. An open auction in range in value, expecting wide swings on the open, expecting this to pull back down into the 27.65 area, potentially a little bit through. I'm looking for an impulse up that would tell us, okay, let's get on the long side, consolidate, and then start to squeeze the overnight high for the overnight stat. We have a weak high here. Expect to see if we have any interest today. I would expect to see 2,800 again, and then ultimately, I'll dash it. Ultimately, we're looking for 2806, 2807 key test area. If I'm long into that 280607, I will be taking the short or reversing in that area on the first test. If I'm not long into that area, then I will be initiating a short into that area on a first test. I'm not saying it's a guaranteed trade. Every trade is a 50-50 outcome. But this is what I'm expecting today. I'm expecting the market to dip down a little bit. Some profit takers. The overnight inventory is 100% long, and I'm expecting that to balance out a little bit. Open auction is the second idea. Push into 27.8750. Push through by a little bit. Impulse down. Consolidate, and then start to work its way down. Consolidate again at 27.50 in the stock zone. And then potentially push into the edge here, into the edge of the value area, and finish somewhere in between. That's what I'm looking for today. I expect heavy participation again. Yesterday's volume was, again, multiple times the norm, or what we would call the mode on a daily basis. The overnight volume is about 4 times the mode over since 2015. So there's still a lot of participation. The VIX is still high, and there's just a lot of opportunity here, in my opinion. As I've said, not sure if I said it in the Trader Bite or in Convergent Chat. As I've said, this is an environment where it is worthwhile to extend your stop, to widen your stop, but also widen your target so that your risk ratio is still in line. And if you're trading a smaller account, it's just probably better to just sit out or move to something like the M6E and look to see what there is to do there. When I'm looking at the M6E, I recommend using the 6E charts, the Euro charts, and then trading the micro. If you have a smaller account, you want to continue to participate live. Simulators have a limitation. So a very interesting week. One thing I'd like to ask you to do, hit the like button before you leave today. Please do. Just hit like, find it, log into your YouTube account or Google account, and hit the like button before you leave. Good luck. It's been a fantastic week. And for those of you who struggled this week, just hang in there. This is just a temporary change. This volatility is very likely to be temporary. And we're likely to get back into the in line with the traditional rotations pretty soon. Good luck, and I'll catch you tomorrow. Have a great weekend.